This video, let us talk about the most controversial or the most mover or most talk stocks this week, Kandi and Kodak. Also, we're going to talk the latest result, earnings result, and future or next move by our most admired stock, Apple. Hello everyone, welcome back to our channel. This is me again, Money Mind. But if you're new to this channel, please click that subscribe and your like button so you can help this channel to grow. Kodak shares was alive last July 29, 2020 when it reached to a 52-week high of $60 from its 52-week low of $1.5 or an increase of 3,900%. Oh, that was a crazy and a shocked move on this stock by a matured unicorn who had declared bankruptcy last 2012. Notably, this crazy movement came from the U.S. International Development Finance Corporation loaned to Kodak amounting $765 million as directed by United States President Donald J. Trump to support Kodak to manufacture pharmaceutical ingredient or in support for Kodak to build another segment which will be called as Kodak Pharmaceuticals. Accordingly, Kodak will help manufacture an ingredient that would fight COVID-19 and it will also give pharmaceutical components or ingredients for generic pharmaceuticals. But is it worth it for the company to have this business for the industry with a very low profit margin? Though Kodak CEO said that they are more than a chemical company than a camera brand as they used to be, yeah, I also agree with that because they also have other services like printing, motion picture, and consumer products, which their camera and printer, also the TV and other stuff. They also have advanced materials and material specialty, specialty chemicals. So they actually have that segment or specialty or specialization to manufacture chemicals. In fact, they also have prior business venture into pharmaceuticals, but they stopped it, right? Even that, considering that their profitability margin currently at 1.89% only, an operating margin of 3.94% with a trailing price earning ratio of 432.32, which is really high. Total debt equity ratio of 108.18 and current ratio of 1.27, which for me is good. This is good. This is actually the best for a matured company because they have money. And the book value per share is negative 0.57. I would say that we have to stay away from this stock at this current price. Meanwhile, another China's EV company named Kandi make waves this morning, July 30, 2020, as its stock reached an all-time high at $17.40 or 702% increase from its 52-week low of $2.17. It happens or it emanates when its subsidiary Kandi America announced that they would have a launching on August 18 for the sale of their EV in the United States with a refundable deposit of $100. However, stocks stumble on the intraday trading. It seems that the day traders is the one playing the stock. After reaching at 17.5 and 16 level, it dropped to 10. It dropped to 9 and eventually closed at 9.13. So as you can see, the graph also is like a mountain, just like the Kodak trend. What happened? It might be the cheaper EV price in the United States with its K27 price at $20,000 before government incentives, but it has a lower range of 100 miles only, with a 17.7 kilowatt hour battery and a top speed of 63 miles per hour. For an additional $10,000, the buyers can also buy a larger one, which is Key23, with a 41.4 kilowatt hour battery, giving an estimated range of 188 miles and a top speed of 70 miles per hour. Can it survive the competition? With a price of $30,000, Americans actually has the option to buy Chevrolet Bolt or Nissan Leaf, having superior quality or superior feature compared to Kandi. So it might be the reason why the price dropped slightly when this article from Motley Fool being released and was seen in Yahoo Finance. Though no one knows about the quality of Kandi until it is shipped to the United States, no article yet, I won't suggest or me would buy this stock because I believe that it cannot outpace investors' expectations or analysts' expectation, so therefore stock price would be lower than $5 until they can produce another unit or another model that could outpace the luxury of electric vehicle industry. Finally, our third stocks roundup this week is Aapl. Aapl had posted a third quarter revenue of $59.69 billion. Even at the midst of pandemic, their profit rose about 12% to $11.25 billion or $2.58 per share. It results to exceeding analyst expectations of $52.24 billion in revenue for the 3 months ended June 27. But what interesting to me on their earnings report this afternoon, July 30, 2020, is the 4-for-1 stock split. It means that investors can have an extra 3 shares for their 1 share, or 4 shares times the number of shares they have currently hold. Example, if you hold 10 shares, then multiply that by 4 and then you can have 40 shares after the split is given. It will be distributed to shareholders at the close of business on August 24 and trading will begin split adjusted by August 31. But what it really means? It actually don't mean anything for the company, but it means to us retail investors, especially those who are not current stockholders of the company. Why? Because we can actually purchase this stock at a lower price, which currently at $400 after market of July 30 as it closed by 384.76. So why I mean we can purchase it at cheaper price? Because if we use the current price today after market of 409 divided by 4 and then you have the opportunity to buy Aapl share at $102. So the question is, are you going to buy it now or wait until August 31? So if you buy now, let's say that you have $2,000 for investing and then you can have 5 shares. By August 31, you have 20 shares. That's good. And if Aapl price increases to 500, and then you can have a 2,500 capital gain. However, if you wait on August 31, and then the price becomes 500, then divide it by 4, and then you have to buy that price, that stock at $125, resulting to only 16 shares you can have for your $2,000 budget. But if the stock closes at a lower price, let's say $380, then divided by 4, resulting into a $95 per share. So now you can have 21 shares. So what I mean here, as early as now, you can buy this share. You can buy Aapl stock. Do not wait until August 31. What if stock price will reach more than $500? But if you have that instinct, if you have that guts that the price would be lower, which I think not, it could be around 400 only actually. I always believe that Aapl is the best company, one of the dependable company that we have. Actually, per Yahoo Finance, it has a growth estimate of 10.99% for the next 5 years, while next year it could have 20.4%. And actually this year, we all know that we are in a crisis due to COVID-19. It has a growth rate of 4.5%. Aapl having a forward PE of 25.70, I don't mind its trailing price earning ratio of 30.23. As in the technology industry, it is common to have a high PE, right? Its PEG ratio, 5-year expected, is 2.78, which actually means to me that this stock is being sold at discount. It is a dividend paying company with a yield of 0.86%, profitability margin of 21.35% for profit margin, and operating margin of 24.48%. Management effectiveness, which is also crucial ratio to look at, return on asset 12 trailing months is 12.38%, and return on equity at 62.09%. That shows to me that Aapl is the nice choice or the best stock to invest, actually at affordable price compared to Amazon at $3,000 or Google at $1,000 per share. They have a current ratio of 1.5, which is good, and they have a total debt to equity ratio for most recent quarter of 151.43:1. But look at, they have an operating cash flow of 75.37 billion and a levered cash flow of 45 billion. That's amazing. They have 94 billion of total cash in their most recent quarter. So that means that the company would never have a problem with regards to cash flow, and they have the opportunity to still give us advanced technology and innovation. So that's all for today, guys. Thank you for listening and for your patience. If you like this video, please click that subscribe and like button. Also, your notification bell, so you'll be updated on my upcoming videos. Remember that I'm releasing at least 2 videos every week. Always remember to invest early and save more money. Manage your finances as early as you can. We millennials have to be money-minded.